Very good evening, folks. Right, so it's 8 p.m. Today's the 20th of August, and we will be looking at the upcoming FOMC minutes. That's going to happen in roughly about 6 more hours. And then the focus will be on gold today. And we have recently seen quite a bit of movements on gold, so it'll be of interest to you guys. Right, my name is Sherman, and I'm an FX strategist. I mainly focus on technical analysis. So we're going to do quite a bit of that today on gold. Okay, quick disclaimer before we begin. Trading in forms of derivatives carries significant risk. To ensure you fully understand what we're doing before you make any trading decisions. All right, always start with your own demo account first before moving on to your live accounts. And for those of you who are starting your live account, there is the ongoing credit bonus, deposit bonus. So you get up to 50% for your first $1,000 deposit, and it's up to $500 credit. Okay, any subsequent deposits gets you 10%. And with that, we'll be looking at a few key things. So let's look at the FOMC FedWatch tool first. So for those of you who are new, head over to cmegroup.com. Okay, under data, under markets, you go to interest rates. Okay, and under interest rates, there is a tab called the tools, and we want to be looking at the CME FedWatch. Okay, there's a lot of content on the CME group that you can actually use for your improve on your trading knowledge. So be sure to check them out. But today, the focus will be on the FOMC interest rates decisions. Okay, so today will be the FOMC minutes, which will give us an insight into what's going to happen on the 17th of September. All right, so for the next 6, 8, 10, 11 sessions, right? Next 11 adjustments of your interest rates, right? It's all shown here, and the probabilities are basically a consensus amongst the top 18 financial institutions in the US and what they think the target rate is going to be. Okay, so what's interesting for the upcoming 17th September federal meeting is that 1 week ago, it was at 94.3%. Okay, and this is looking at a 25 basis point cut. And because of the recent news, okay, you can see that percentage dropping down to 82.9%, right? Even though it's a drop of about 12%, okay, the overall consensus is still largely towards a 25 basis point cut. All right, so if you look down further to 29th of October and then to 10th of December, you can see that majority of the consensus it's towards a 0% cut in October and 46.1% towards a 25 basis point cut. And then for the 10th of December, probably highest percentage will be a full 50 basis point cut from today. Okay, so before we head down to the charts, let's look at the overarching consensus on gold, and this is done using Gemini. So if you head over to Gemini, create a research topic around FOMC minutes and its effect on gold, or you can simply put today's topic, right? And you allow Gemini to actually do the research for you. And what it does is that, let me see if I can grab that research in here. Okay, so basically it gives you an outline of what it's going to research. You can change if you want to find out more, or if you want to omit some of these topics. And basically you'll run through the web, search for all of this relevant information, and compile a report for you. Okay, so this is what the AI can do for you right now. Okay, and so I'm not going to go into the details of every single fact that Gemini has come up with. We're just going to look at the infographic that it has generated. Okay, so largely from the 94% drop to the 82% consensus, that was largely due to the annualized core CPI at 3.1%. The expected was 2.7%, and the target was 2%. Okay, so we saw an increase in the annualized core CPI. And that's a cause for concern for if the Federal Reserve is going to reduce rates, that will further exacerbate the inflation problem. Okay, I think the high of 2022 Q3 was at 4.7%. So we've come quite a long way. And in terms of the non-farm payrolls, only 73,000, and I think the target, the consensus was about 121,000. Okay, so lesser jobs created, or lesser non-farm payrolls, and a higher inflation rate, which are two of the key statistics that the Federal Reserve is watching. Okay, market sentiment, again, this is subjective, but 85% thinks that the rate cut is already priced in, and 15% thinks that the rate cut hasn't been priced in. Okay, so some information from your commitment of traders. So commitment of traders report is being released every Friday, starting from the trades or the flow on Tuesday that week. So 4 days worth of data being reported through the COT report. Okay, and so you can see that the net long position, okay, there is a change of a positive 157,585. Okay, so large speculators still remain bullish. Okay, but it's not overly bullish to the extent where we are seeing gold reaching a higher high. Okay, so these are the key levels based on the technical analysis done by Gemini. 3,100 as your long-term support. Very absolute numbers here. 3,100 as long-term support, 3,003 as key support, 3,348 as your resistance. We'll be taking a look at this number later, 2,348. And then, of course, 3,500, which is the peak that we saw in April. Okay, so in terms of your physical delivery, okay, you can still see this very skewed graph where the demand and the state of delivery is still skewed towards more demand for physical delivery. Okay, so 1,136 purchased back in 2022. Okay, and this year alone, it's 259. Okay, so 3 key recommendations by Gemini. If it's a dovish pivot, we'll probably see a retest of your April's peak. If it's hawkish in terms of the FOMC minutes, right, then you'll probably see the dollar strengthen quite a bit and go breaking below or move towards 3,003. But if it's neutral, then we'll see it range in the charts later. Cool. So overall, I think later it will be more obvious on the charts, but we are probably looking at a neutral stance on gold yet, because the move up for gold was in 2024 Q4, and right now we are just ranging around the 3,300 and the 3,348 level. Okay, so we're gonna head over the charts. I'm gonna draw where we were looking at based on Gemini's recommendations. Okay, so this is your XAU USD 1D. Make sure you are using the one by Vantage. Okay, XAU USD, so that you have the exact uh, data feed given to you. Okay, so we want to look at 3,300, which is around here. Okay, first level is 3,300. Second level is 3,348. And then the last level that we're looking at, the furthest resistance is 3,500. Okay, I would say this is also a key support here, but it's taken over by this 3,300 line here. Okay, so we came out from 2024 Q4, which is around here, Q4, and then a move in January before we started to range in this. We have mentioned a lot during our earlier webinars, but the key thing here is the flag that was created. Let's see. This very indecisive move within the range that started from April. And again, this was where the tariffs happened, 9th of April. Okay, so once the tariffs were announced, money flow out of equities into gold, and then a quick retracement once money went back into the stock market. But we are seeing a very strong support around the 3,300 region. Okay, this indicator on my right, it's the visible range volume profile. So basically, it looks at the tick volume, right, at every price level instead of time. Okay, the one below, it's based on time. So every candle represents 1 day, and this is the volume that we saw on the day itself. But this VP, visible range volume profile, we are looking at the amount of volume at every price range. Okay, so we're coming into the region where you see the maximum amount of transaction, which makes sense because of the upcoming news. So you'll probably be coming into here where majority of the transactions are going to happen. And then once the news has been announced, we'll probably see a strong move to either side of the market. Okay, so range, we want to keep within. And right now, because we have just bounced off the bottom, we want to look at the level in which where the sellers started selling without any support from the buyers down into this range. And right now, if we take out that level, then we will be bullish all the way up to around 3,400. Okay. So again, these levels are the key levels that we're looking at. This is the Gemini level, but we'll be looking at this key point here because this is where the selling started, and it pushed all the way down to this level here. Okay, so if we're bullish, we want to see price cleanly close above this. We'll probably see some resistance at 3,258. Okay, but this is going to be a key support once price breaks out. So how it look like is something like this. And we'll be looking at this key level as a retest. Okay. So overall, we are still in a downtrend. And how do we actually determine if we're in a downtrend? We want to see supports being broken. So this key area here, broken. And the only time we are looking to be bullish is when the highs at this 3,345 has been taken. Okay. Otherwise, in a standard market structure, we are seeing something like this. It's overextended, but nonetheless, it created the double bottom without making a higher high. And so we are still in a bearish momentum. Okay, this is the 1 hour. And then on the 15 minutes, okay, On 15 minutes, we have already flipped bullish. Okay, why? Because this was that support, right? This has to be acting as the resistance. And what we were really looking out for was this low range here. Okay, and we want to see the price get down at least to this level and then make a lower high before we start selling off. Okay, so once we see something like this happening, okay, we got to be cautious because the buyers here are still in the market, right? At this price level, all of the buyers here, they're still in the market. So if this high is taken, then the buyers, this will be the second instance or second set of evidence that tells us that the buyers are coming in to support the level. They are still remaining in the trade, and price is going to be delivering higher. Okay, so if we are still looking for, if this doesn't hit a buy target, okay, we want to look at this high, okay, because this was where the sellers came in. The sellers came in here, they push it down, came back up to resistance. The transactions between the buyers and sellers had a winner where the sellers were all stopped out. And so this gap here is going to be critical for us. Okay. This is going to be a very interesting buy again if it comes in here and act as a key support. Okay, so where is the target that we're looking at? This is the target that we're looking at. Okay, but we also want to be mindful of this support here. Previously was a support. As it comes down into this level, you can see some buying power here. And as it attempted to push up to the top, sellers double down, push it down to a 100% retracement, and then retested this area. So this is going to be a key area where you will not find new buyers trying to push it up. This is where the buyers will be cautious. So we can expect some sort of movement to the downside before we retest up at this high here. Okay. So essentially, if we're looking at this as a resistance level, and there are basically a lot of sellers coming in now, right? If sellers come in prematurely before we hit this level, then this will not happen. Okay. What would probably happen would be that the sellers being stopped out will push it above the level and we'll see a higher high. So right now, both the sellers are allowing the buyers to push price up even higher into this area. So we'll probably see a short-term retracement right around 3337. Okay. And if it retraces successfully, this will be the pool of failed sellers, because this was the resistance. They failed this sell here. And this was them being stopped out. If price do in fact come back down into this area, this is going to be void of sellers. So price will not tend to push down even lower. We will probably see price rebound from here. Okay, so as you can see, coming in here 5 minutes or even down to the 1 minute, you can see very little resistance from the sellers. So as long as there's very little resistance from the sellers, you can probably see that the selling will only take place at this level here. Okay, what you got to be afraid of is if price falls below this area here, okay, building up a lot of liquidity, okay, that is where you as a seller, you have to be afraid, because then it will push you up once there's cascading stops. Okay, so as we are coming down into this area, you can see you'll probably start to see more volume coming in. Okay, and then a lot of the sellers looking at this level as a very interesting level for them to take a sell. Okay, so of course, if you are on the premium. You can look at premium on trading view. You can go down to the 15 seconds and start to see if there are sellers coming in to push the price down. Okay. And you see the length of the candles, you can see that's pretty small. Okay, this is 15 seconds. But once it gets up to this level, this push to the upside is due to this small group of sellers here. Okay. A small group of sellers here, they got stopped out. They came in prematurely, too early into the market. And then they got stopped out, push it up here. And you can see where there isn't any new buyers coming in here. Okay, if there are new buyers coming in, then we'll wait for that retest to push it up. So right now there isn't any evidence of buyers coming in. Okay, we're coming into the New York session in about a couple of minutes, right? So you'll probably see quite a bit of transactions around here. And if you're using the same indicator as me, the VRMP, visible range, volume profile, you'll probably start to see a lot of these candles starting to grow in length. And as they break beyond the volume that was seen in the buy side here, okay, it means the sellers, okay, at this high price, it will only mean more transactions happening. Two things happening. One would be buyers getting out, which in a sense, they are actually sellers. Buyers who came in early in the morning, Singapore time, early in the afternoon, Singapore time, and they're looking to cash out before a big news. Or sellers looking at this support, flipped, and this was yesterday's New York open, flipped, second chance, they took it. And so this is going to be a likely area where more sellers come in to take advantage of the knowledge from that failure of the buyers at this level. Okay, so that's kind of like the whole roadmap for gold today. So you can see some sellers coming in, okay, and you can see basically put a trend line just below it. And what you want as a confirmation is that you want this trend line to fail. Yeah, as it fails, you're looking at any gap that was formed from this break, and you want to take that to a short-term sell, roughly around $6, $9, $8, back down to this level, and then you add on to your buys. Okay. So you'll probably, once it broke out of this, you'll probably start looking for buys here. Right? Looking for buys. Okay, on the 1 minute, on the 5 minutes. On the 5 minutes, might not be clear because you'll be targeting this high. Right. So this was quite unexpected. But if you're on the 1 minute, okay, you would see this as a key failure of the sellers. They sold down. Okay, you were supposed to target maybe around this fair value gap here. The failure of the earlier growth sellers, okay, but the buyers were aggressive, so it pushed past this high, and you can see this big candle created based on that, the analogy or the idea that the sellers were stopped up. Okay, so as a retest, you want to get in somewhere around this level here. So this trend line has to hold. And I wouldn't recommend buying here because you are right at the area where the buyers fell previously. You probably can scalp it up to this level, and if you're lucky, sellers might be stopped out, right? But overall, you want to be careful. You want to make sure that this holds and price maintains at this velocity. Okay. If the velocity change, which means that based on this movement up, right, it suddenly shoots up, okay, you want to be wary that it does not retrace more than 50%. Okay, otherwise you can actually infer that a lot of this volume was caused by stop losses. Okay, if it comes below 50%, you can expect that reversal to happen. Okay, if you want the price to continue going up higher, you want it to break out, and you can't find any sellers at this level here, and it ranges before it moves up again. Okay. Cool. So that's what I have for gold. We are looking, so right now, no sell signals, even though on the higher time frame, we are looking for sells. Okay, we're gonna watch out these levels and then the target, okay, at least to 3345 to 9. Okay, and expect a lot of volatility coming in during the FOMC minutes, which is roughly 5 hours, in 5 hours time. Cool. All right, that's all I have for you guys for gold. Right, if you want me to look at any time frame or any other symbols, let me know. We still have about 3 more minutes. All right. Okay, we will only look for a sell once it breaks below this. So again, how do we actually determine the entry? A good rule of thumb is that it has to create a failure first. So it has to break below this trend line that has been followed by all of these traders since 1945. So this is about roughly an hour. What you want to do is you have that target. You have that target here. Okay. And again, this was missed out. Okay, the buyers were aggressive earlier on, so you probably retest this level here. Okay, and your stops will probably be about this around the high, and you want to have your entry around 1:3 for the excessive risk that you are taking, counter trending the short-term trend. Okay, so once it comes back up into this level, then we'll try to target this area with 1:2 risk to reward. Okay, so time it, you have 5 more candles to the announcement of the FOMC minutes. So you'll probably want to see, I mean, if you're lucky, then you'll probably be able to sweep this high and you get a much better risk to reward. Okay, cool. So a few things that we have gone through today. TradingView, this is the charting tool. Gemini, which is the AI tool to do your analysis for you, right? Help you do the research, do some web searches, combine all of the information into one key place, and then you are able to, let me see if I can show you guys the research done. Open. Okay, so a lot of this was mentioned in the infographic. Okay, but the key things is you want to make sure that the sources that it's using, it's legitimate. Okay, so you have things from like CBS, Tasty Life, okay, Times of India, CBS News. Okay, so depending on how Investopedia, quite reputable, as in some of these sources are reputable, some of them less likely. So what you want to do, if you think that one of these sources is not relevant, you can basically tell Google or Gemini to omit some of these websites such that the final report is more catered or more suited to your needs. Okay, so TradingView probably to get the latest price. Okay, and all of this information that is shown here. And of course, you can share this with anyone who's interested. Okay. Yep. So this is Gemini, and then we have the FedWatch tool. Very important. Okay. Even though this looks a bit old, okay, but it still serves its purpose in telling us kind of like the reaction of the markets. All right. So that's all I have for you guys. You can find all of the past webinars here, vantagemarkets.com/academy/live. Yep, and you can email support@vantagemarkets.com if you have any issues regarding the broker. Right, with that, I will end the webinar here, and I'll see you guys again tomorrow. Yep, I will share more about the channels where you can follow my analysis in future, because I think we are probably not going to do this webinar with Vantage as often. So I'll probably share some of these links in the next few webinars. But for now, every Wednesday and Thursday for the month of August, I'll be here giving the webinar. So you guys can still follow me through these webinars. And then post-August, I'll share some of the links that I'll be sharing some of this analysis where you can join and sit in. All right, cool. Thank you guys. I appreciate you guys, and I'll see you guys again tomorrow.